Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a special guest for you, Anthony Power. He's an independent Bitcoin mining analyst based in the UK. Bitcoin's been on an absolute tear over the last couple of weeks. Our stocks and our investments in that sector are doing amazing, and Anthony is actually one of the top people in this space for producing comparative charts and analytic tables that are used by the Bitcoin mining community. Now with that being said, we've got a lot to talk about in today's presentation, but before we get into it, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below what you think of Anthony's analysis, which of these stocks is your top or favorite holding in the crypto mining space, and what your thoughts are or your price prediction on the price of Bitcoin moving into next year's halving event. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got Anthony Power. He's an independent Bitcoin mining analyst and a chartered accountant. Anthony is well known in this space for producing some of the best comparative analysis charts of the top Bitcoin or crypto miners in the market currently. Anthony, thanks so much for being with us here today.
Thanks, Tommy Bryce.
Excellent. So we'll get right into it. Anthony and I had some great discussion before we started filming here. A lot of common interests. We're really excited about the sector. So to kick things off, Anthony, how did you get into the Bitcoin mining or analytics space?
Just to give you a bit of an introduction, my background was 25 years in the military. So I was a soldier. I was an E9 in the army, and I left 15 years ago. And then I was qualified as an accountant during my time in the military. And when I left, I worked as an accountant for the National Health Service, which was one of the biggest employers in the UK.
Okay.
I retired a few years ago. And during the COVID days, when we were all sort of like locked in our apartments, I started analysing and doing a small amount of investing in stocks. And it wasn't the Bitcoin mining stocks to start with. It was more the banking stocks, looking at, interest there, looking at the accounts, going through and doing some analysis, comparing banks. And then one day I invested a little bit of money in a company called Marathon Digital back in 2020, towards the end of 2020, when the price was probably about $4 or $5 a share. And within a couple of weeks, it had gone to $20, and I had to stop myself and think, what's going on? I need to know more about this industry. It was more of a speculative investment. And I started to try to understand more and did some research. And I found there was some good experts in the space. And one particular expert was a guy called Blonity, who's well known in the Bitcoin mining space. And I started watching his videos and realized there was more than just Marathon Digital in the mining space, and started to look at a few of them. Fast forward about 12 months, and I started to then put I guess when I was on the mines, and started to put it on Twitter. So around about September 2021, I think I put my first tweet out, and it was a table of about 7 or 8 miners, a little comparison table, and I used the Bitcoin mining per exahash as my metric.
Gotcha.
And I did like a ranking, and lo and behold, I had like no followers to start with, and all of a sudden it was like building momentum. So it just sort of got the ball rolling. And, fast forward another 18 months, and I've just tried to develop it. I've not really moved from Twitter. I've started doing some podcasts with other individuals, which has been really good to get the information out there. A year ago, so I think 6 months after I'd done my first tweet, Compass Mining approached me and said, "Hey, Anthony, we like what you're doing. Can you write some articles?" And I said, "Look, to be honest, I don't write articles. I just do tables and data on Excel." And they just said, "Look, just do that. Put that into an article, and we'll pay for it. It's just you're independent. You know what you're talking about." So the last 12, 13 months, I've been writing articles for Compass Mining. I think we're up to about 50 articles now, and maybe 7 or 8 podcasts. So it's been really good. And what effectively is a hobby for me has become sort of like a sort of a little income stream as well. So it all helps.
Sure.
And what I try to do is build on the types of metrics that we use, and we'll talk about a few more of those in a second.
Okay, great. Yeah, we have a very similar story, kind of starting with the pandemic and finding our way to the Bitcoin space. The exahash per second, it's a super compelling metric. It's something I refer to in a lot of my videos, and it all started with Anthony, so thanks to you. Now, for viewers who are unfamiliar with some of your work, I know we have a few example tables that I'll throw up on the screen here. You've done some really cool rankings, kind of overall financial health of the company. You also put out a monthly performance ranking of all of the top miners in the space, which we refer to a lot. A third one that caught my eye on Twitter, and for the record, I'll leave Anthony's Twitter in the comment section below. So make sure you guys take a look there as well. It basically said based on $30,000 US Bitcoin, which is where we're sitting or approximate right now, the profitability of each one of these miners. So tell us a little bit about these charts you put together, Anthony.
Yeah, so the standard monthly chart is, as you've already alluded to, is basically monthly performance. So that all the Bitcoin miners who put out their updates, and believe you me, if you look at the updates now they put out compared to sort of 2 years ago, they are vastly different. 2 years ago, it was 2 or 3 lines. Now you're getting 2, 3, 4 pages of information. So really, they're really looking to get as much information out there as they can for the shareholders and potential shareholders and retail investors to look at. I have some criteria that I require to do the metrics. I need to know how many Bitcoin they've mined for obvious reasons, and that's from self-mining. I don't cover the hosting or other types of coins that some of the companies mine. It's purely Bitcoin self-mine. I need to know if they're hodling the Bitcoin, so I need to know what their hodl amount is that they're holding as at the date of the update, which obviously then I can calculate how many Bitcoin they sold. And I also need to know what their operational hash rate is. Now, 18 months ago, again, when I started, these companies were all about, we're 1 exahash aiming to go to 2 exahash. It was all about putting in the highest amount of hash rate on their returns that they could. But what we're seeing now is that miners are being a little bit more open and saying, we might have a hash rate of 3 exahash, but our operational hash rate for the month was 2.8, to show that they weren't achieving 100% utilization of the hash rate. So by giving me that information, I can then do some calculations, look at what they're mining as an average day rate. Because Bitcoin mining is accounted for on the last day of the month, I can calculate their revenues. Some miners do sell their Bitcoin on a daily basis. If you look at the likes of Iris Energy, they sell every day. But Iris, in their monthly updates, tell me what their revenue they've achieved for the month, so I can include that in my table as well. So it gives quite a lot of information, and that goes out there. And I do rank it, but what I always try and stipulate to people is that, don't take one metric in isolation. By having a consistent production each month is a great thing, and it really is, because in the words of Ben Gagnon, who's the chief mining officer at Bitfarms, you're only as good as your currently production is. Yeah. And I know for the last 12, 18 months, the first miner to produce their updates every month is Bitfarms. Day one, working day one, it comes out. And for some of the miners, you could be waiting to working day 7, 8, 9. I sort of give them a time frame. I'm chasing miners on day 5. I want to get the article out by day 6. Okay. And you say to me, if you can't get information, you can't go in the article. It normally G's a few of them up and they start sending it in, and they realize it. Because, by the time day 9, you're sort of nearly at the end of the month for the next day, a lot of data to come through. So I am sort of quite, I do apply a little bit of pressure to some of the miners to get a move on. And most of them now, of the 14, 15 miners that I do look at, generally get it in them sort of first 3 or 4 days. And it's getting quicker. I noticed that now. It's getting some of the miners coming out day 1, day 2, as well as Bitfarms.
We were joking about that before. You snooze, you lose. If they're not on time, they don't make the power ranking.
So that's the monthly update. I have started to do on a more regular, probably a quarterly basis. Is when the quarterly earnings come out, you get far more information in the quarterly earnings. You can do far more analysis. So you can look at far more metrics. You can look at the strength of the balance sheet. You can look at the operating cost statement and look at how much their margins are. Look at what, when I say margins, and I mean gross margin, that's generally the the price of the Bitcoin less the electricity cost. That gives you a gross margin, because electricity cost is the biggest cost that the miner will have during the duration of Bitcoin mining. And what I then look at is the operating cost. So the operating cost will be the G&A costs, which will be sort of staffing costs, training costs, travel and subsistence. I only look at the cash costs, so I don't really cover the depreciation. I remove the stock compensation. We can talk about stock compensation if you want. They're non-cash costs, but stock compensation is still an important cost to consider, because some of these miners are using stock compensation to reward their senior management, and I understand the premise of making sure that directors are rewarded for making sure their goals follow the goals of the company. So I do these quarterly updates. Just over a month ago, I actually did what I call the mid-tier equivalency table. So I looked at all the mid-tier miners. So really removing the likes of Mara and Riot, who are sort of at the moment, I say at the moment, they are the two biggest miners. Yep. Core Scientific would be in that group as well, but Core Scientific are currently in Chapter 11. And when they come out of Chapter 11, which I envisage they will do in the next few months, they'll go back into the tables because they're producing, last month I think it was 1,300 Bitcoin. So I didn't include those three miners, and I did include some of the smaller miners, and I have stipulations. You have to have an exahash of 3 per for the miners, and a market capitalization of 200 million. Okay. So there was 7 miners that fitted into that criteria quite well, and I was able to do some analysis based on about 9 or 10 different metrics, and looked at the whole fleet of things, and it was quite interesting. I mean, the standout miner from that particular time was Iris Energy. They've had a real turnaround in the last sort of 6 or 7 months. I mean, we saw Argo blockchain nearly going to Chapter 11 when Core Scientific went in. Iris Energy were also defaulted on their loans, but had some sort of an SPV or 2 SPVs, which were able to default and not impact the company, the main company. So they were able to sort of hand back the miners that were collateralized against the borrowings, and reduce that debt down to 0 and just literally hand the miners back. And then with some of the cash they had available, they were able to literally repurchase new miners to fill the gap. And we've seen the last 3 months, Iris Energy go from 1.7 exahash to 5.5 exahash. So they've recovered and grown to their expected hash rate in a very short space of time. So they scored quite well. The CleanSpark and Bitfarms also scored quite well. There were actually 4 or 5 miners that, if the metrics had been slightly, if they were slightly different, those numbers would have changed. So I would say there was 4 or 5 miners that were sort of very, very close. TeraWulf is a fairly new miner, and although it came out bottom, it does have some great metrics, and it has some really important metrics. And the main metric it comes out top in is effectively it's got the cheapest energy. Mm-hmm. And as I said before, if you've got the cheapest energy going into a halving where your energy costs will double overnight, you want to be on the cheapest contracts. And at the moment, of all the miners, they've got the cheapest contracts. Cipher Mining are very close, and Riot blockchain, I think, at the moment I've got the 3rd lowest mining cost. So just because there are some of the metrics that didn't work as well for TeraWulf, they have got some debt on the balance sheet, and I've spoken to them in the last few weeks, and the finance director, he has a plan to sort of look how we're going to bring that debt down to a more manageable level and see them through the halving. So, I think TeraWulf have got some potential there, even though they didn't come across as one of the highest ranked. They've got some attributes that are worth considering. So, and I think I put that in the article attached to that table, that don't just look at one metric, look at the whole picture.
Okay, so Iris looking very strong, and TeraWulf as potential up-and-comer. And it's really interesting. We talk to a lot of the same people in this industry, and we're going to start trying to do some more cross-promotion here, get some new CEOs on my channel, use some more of these tables or Anthony's analysis in our videos. Now, you kind of alluded to this in our intro, Anthony, but based on your analysis and these different metrics you've looked at and the weightings, which are also important, which would you say is kind of your standout overall pick right now in the space? Is it Iris?
I'd say that I'll be honest with you, Bryce. I was thinking about this earlier today. I could make a case for 3 or 4 miners. Iris Energy certainly in that 4. There is some issue that's still to be resolved with regards to the debt with NIDIG, and I think they're going through the courts at the moment to sort that out. If that becomes a positive for Iris, and they do exactly what they're going to do with the new Childress site and start growing that site as quickly as they can, then I think everything's positive for Iris. Their market cap at the moment is ridiculously low when you compare to their peer miners. It's today's date, the 23rd of June, you're looking at 260 million. And we've already spoke about TeraWulf. I think they're at 340, 350 million. So that's 100 million more. And they've got 100 million debt on the balance sheet. So I think that they're undervalued, Iris. I'd look at CleanSpark. I think CleanSpark in 2022, they went from 2 exahash to 6 exahash during the year. So they were the only miner in 2022 to achieve their growth strategy. They're going to get to 10 exahash in the next 4 or 5 weeks. Listening to Matthew Schultz in a recent podcast earlier this week. And they'll achieve 16 exahash easily by the end of this financial year. They've already got the orders in for the miners. They've bought more sites. They even bought a site in this last week, which is a ready to go site. Just need the miners plugged in, so everything's there. The power's there. So it was like a 1 megawatt capacity there. So everything's positive for those. Bitfarms we've alluded to as well. Bitfarms, very well run company. They have the ability to have locations in 4 different countries. So they have Canada, the US, Argentina, and Paraguay. And although there was speculation about the political unrest in South America, we're starting to see green shoots come from those facilities over there, and they're actually expanding those sites now quite rapidly now to get to their goal, which was originally 6 exahash by the end of the year, but I think they're going to exceed that. I think they're looking to at least get to 7 exahash by the end of the year. You can never discount Mara or Marathon Digital and Riot, basically because of the sheer size of both those companies. We're talking about 2 companies they were the first to be listed on the NASDAQ. They're both US companies. So when you're looking at the retail investor, in North America, most retail investors are obviously in the US, and they're looking for US companies to invest in. And so they got the march on literally all the miners and were able to use that investment to build up their hash rates rapidly. We've seen Marathon Digital reach 15.2 exahash in May. And if you look at the update today, it looks like, a lot more of their machines are going to get switched on. I think it was Applied Digital have energized their site, and Mara's one of their biggest customers. So I think we'll see they've got 4.8 exahash of plugged-in miners waiting to be energized. So that takes them to 20. They have a goal of 23 exahash, and they also have opportunities in the UAE to even grow further. So you can't discount the Marathon Digital. Riot Platforms also got a big facility at Windstone, building an even bigger facility at Corsicana. And I've just literally come off a call with Jason, and that's progressing, and we'll see, hopefully get that 400 megawatts of power energized by the end of Q1 2024. So I could put up a case for quite a few of the miners. The difficulty is with some of the smaller miners. How do we go through the halving when your rewards are literally halved overnight? How will some of those manage? So, it's going to be interesting how the DigiHosts and the DMG blockchains and Argo blockchain, who fall into that group of miners who haven't got the capital to grow as quickly as some of these other miners we discussed. How are they going to manage? But DMG blockchain and DigiHost have quite low costs. Argo Energy have got low costs at Helios at the moment. They've highlighted that. So maybe there's an opportunity the Bitcoin price does get away with it this year and give them some sort of like extra margin, pay down the debt, and put themselves in a better position going into the halving. So I think it's a good space at the moment. I think 2022 was a nightmare for miners. 2023 has been far more productive in terms of Bitcoin price and hash rate growth. So yeah.
Excellent. I think just based on your response there, it is an exciting space. Almost all of the companies you mentioned we've covered on the channel. I would encourage you guys to go take a look at those videos, but there's a lot going on in this space and a lot to be excited about. Now, you mentioned earlier power costs. What would you say is the biggest factor moving into the halving event next year for these companies?
I recently tweeted, that so if you have if the Bitcoin price today is $30,000, and if a typical miner, let's look at the average cost of a miner, their average energy cost at the moment is around about the 12,000 mark. So if that doubles overnight, that's going to be 24,000 in energy cost to mine a Bitcoin come April or May next year, depending on what date the halving occurs in. That's before you paid anybody. That's before you've covered any of your overhead costs. That's just the energy costs. So I was asked a question literally 2 hours ago. What would the price of Bitcoin need to be for some of these miners going into the halving? And I think it has to be in excess of 40,000 to give them an opportunity to continue mining and to bring in enough margin to cover their overheads. And as a cost of management accountant, I'm looking at costs all the time. And so, how to get those costs down. Some of the miners might be looking to give their execs or senior management more share compensation, which is a non-cash cost, versus giving them high salaries. And that's a way of reducing costs there, albeit you are slightly diluting shares in the company. But yeah, I'd say 40,000 going into the halving. We're at 30,000 now. The Bitcoin moves in cycles. And if we look at the last couple of cycles, the Bitcoin price hasn't really shot on the day of the halving. I think the last cycle, it took about 4 or 5 months for the Bitcoin price to actually react to the actual halving itself. So it's quite difficult. Nobody out there can predict the price of Bitcoin to any reasonable extent. I see these YouTubers who say the Bitcoin price is going up, and 2 days later they've got a short position for Bitcoin, and it's like long term we're all in for the same thing. We believe Bitcoin's going to do well over the long period. So the difficulty is knowing what it's going to do over the next 12 months. That's difficulty. But from an accounting position, I think 40,000 is a minimum. Anything less than that, you're starting to not meet all your overheads, and you need to pay staff, you need to pay your overhead costs. You have to pay the energy costs, otherwise you won't be able to mine full stop. But that's my point of view.
Gotcha.
Hopefully.
No, that's great, and that's why I don't give price predictions on the channel, because I've got 2 balls and neither one of them is crystal, so as they say. But I would agree, 40,000 break even seems reasonable based on kind of what I've seen, and generally we do see that price appreciation, but as we all know, history is a good indicator, but doesn't necessarily mean it will repeat. But great thoughts there for sure, Anthony. Now, to wrap things up, where can people get more information? What's the best way to get a hold of you, to see your analytics? Any last kind of final thoughts for the viewers here?
So I'm on Twitter, at Casanova_UK, and all my Twitter account is solely used for the analysis. I don't tweet what I've had for breakfast or anything like that, like people on social media. You can go through my, I think maybe 3,500 tweets in the last 18-20 months. 99.99% of those are Bitcoin mining related. And as I say, I get some great feedback. I also get some challenging feedback, and it's good to be challenged. I need to make sure that I'm on my toes. There are times that I get things wrong, and what I try to do then is try to put out another statement to update the fact that what may have been said before was slightly incorrect, and actually having done some more research and understood more. Here's where we need to be, and we're all educating ourselves on a daily basis in this space. For sure. It's exciting times. I was asked on the Compass Mining podcast recently about, what's your predictions for the end of year global hash rate. But to be honest with you, I got it wrong in 2022, and I've already got it wrong in 2023. So maybe my predictions aren't something to be taken account of. Like yourself, I never give share price predictions on any shares. I will put up a case based on fundamental analysis. So I don't really look at the technical side. I know there's a lot of people out there that use technical analysis and graphs, and they can see trends and things like that. And that's great. And, and there's a space for everybody in this. But I'm an accountant. I'll go through the 10Qs and the 10Ks.
Gotcha.
And and go through those updates and draw out the information I think is pertinent to make sure that, people have an awareness. But I always state, what I do is a starting point. You then have to go and do some of your own due diligence before you make any decisions. All the miners' websites now have dedicated investor elements to the website, so you can go straight into the investor arm of the website. And in there is lots of information. All the monthly updates are in there, all the quarterly, annually, all the SEC reportings. So all these miners that are on the NASDAQ at the moment have to do an SEC reporting for literally everything. So every time an insider sells shares, they have to do reporting for that. So you can always keep up to date. The trouble is sometimes that they're not easy to read and understand. So by all means, there's people out there ask the questions. There's so much information on YouTube as well. So a lot of the miners are actually starting to do their own videos to explain. And I looked at some of the videos that Riot platforms were doing as they were starting the build of Corsicana. So really informative, really punchy, couple of minutes long, keeps the shareholders really up to date what's going on. If we finish with the actual monthly update, I'll say, it's got to a stage now, it looks like it's very competitive just to get the quantity of information out there. I mean, as I go back to like 18 months ago when there was very little information, you were having to really trawl for the information. Now, some of the miners are more than happy to share with you not only what they're mining, but the actual cost of mining. So if you look at TeraWulf's recent update, they'll tell you what their mining cost is. So in May, they had a blended cost of mining of 2.8 cents a kilowatt hour, which, if you compare that to, say, Marathon Digital, who've got a energy cost with a hosting element as well of about 7 to 7.5 cents, it tells you that TeraWulf got a really good deal. And bear in mind, the hosting element is about half a cent, maybe 1 cent. So even if you took 1 cent away from 7.5, you're still looking at an energy cost of about 6 to 6.5 cents. That's more than double what TeraWulf. And TeraWulf, using nuclear power, don't have to curtail their energy. They can work round the clock. These miners in Texas having to watch. Now we're going into the hot weather months, they're having to switch off the power to give the domestic users enough energy to do what they need to do. And in the winter with the cold weather, they have equally the same issues because in cold weather we all want to stay warm. So it's air conditioned in the summer, cold weather in the winter. I think there's something like a 3 or 4 month gap in between these two big seasons where things are okay. Yeah. But, if you read some of the updates, Riot have had to curtail most months since they've been in Windstone. And so it's an interesting concept. Yes, it's great to mine there. And, once you can get into Texas and mine, it's fine. But you have to understand it's not 24/7 mining. And that's the nature of the beast. But if you can get a fixed PPA at a really good rate, and mine at those times when the domestic usage isn't high, so utilize that grid when it's there, an opportunity to do that, then you can still make some money out here as a miner. But that's probably a good place to end the conversation.
It's awesome data, and I think it's really interesting, like you say, how far it's come, because you're right. I was in this space a few years ago. It was like pulling teeth trying to find anything. Everybody was talking about projected exahash 3 years out. And now there's just an abundance of metrics and data and cash cost and energy cost. And I think that's why people have really gravitated, and you've seen such tremendous growth with your Twitter, again, which is linked below. You guys go take a look, give Anthony a follow, because you consolidate the data, you make it edible or digestible for the end user, and you can quickly compare and contrast every single metric. So again, you guys, I would encourage you to go through this video, pause on the charts as we're talking through them, and really take a look at some of your positions and how they stack up to the others. I know this video has given me a lot to think about personally. Anthony, we really appreciate your time. If you guys are still watching at this point, make sure you hit the like button, subscribe to the channel. I'm really trying to become the go-to central hub for Bitcoin and the community on YouTube. Anthony, we'll have you back again. I'm really looking forward to this partnership, and I wanted to thank you again for your time today.
Thanks so much, Bryce. Great to be on.
Okay, guys, we'll catch you in the next video. Thanks again for watching.